This is Rod Kusin, Spooman for Risk on Tuesday, October 19th, 2010. All times on the chart are Central Standard Times. A couple of very interesting developments today. We're not going to spend a lot of time on what we're about to announce, but we've been working with multi-charts to see if we might be able to successfully import our easy language into the multi-chart framework, and it succeeded. In fact, it was quite a bit easier than we had expected. We've tested our indicators and our strategies just to see that they are working, and not necessarily to optimize the settings, but just to make sure that everything imported and that our strategies and indicators have successfully plotted in the multi-chart arrangement, that platform equal to what we would normally see in TradeStation. So it's working, it's now available. So for those of you that have an interest in multi-charts, we can do it, and it looks very, very promising. Multi-charts has got some very interesting features to it. You have to wonder what's going on with TradeStation that they would not make available some of the features of multi-charts that people want. And so, for example, we have two data feeds here that we heavily rely upon. Of course, one is the chart that we trade off of, the Emini, but another is the ESINX, the premium. And as we read the premium, of course, we are in a much better position to know quite precisely where to take a trade. And so you can place that on a single workspace without separating the charts. So this is basically one chart with the premium and a subgraph. That's very nice. Allows you to get real nice and close with your the two data feeds horizontally plotted against each other. So we just threw a strategy on here. Don't pay any attention to the overall performance here. We just wanted to see that it was working, and in fact it is. So this is a real fine development, and we're looking forward to some excellent results from working with the people at multi-charts. But let's go back now and talk about a few other things. Once again, we're going to start off our discussion by mentioning the accuracy of our retracement lines from the open. Here are our proprietary retracements. And once again, very, very high level of retracement probability, over 94% today. All of our retracement lines got hit, with the exception of a few that just got formed. But we'll probably hit those a little bit later on. I doubt that we'll hit this one way up here. That looks like we'll reserve that for another day. But 94% accurate on our retracements. Now, you got to keep in mind what that means. When you have a level of accuracy that is that high, knowing in advance what the market's going to do before it gets there, can make a huge difference in your profitability. So let's talk about this. Let's just look at the first couple of hours of the morning. Now, we had, just look at these retracements as we moved up. The market, first of all, moved down, left a footprint down here, but left a retracement line up here. Now, granted, you didn't know exactly which way that was going to go right away, but a lot of indications suggested that we were long at this point. So let's make this abundantly clear, all right? You take a long trade down in this vicinity here, okay? Let's just say you get in at 63.25. And you've got a retracement line that's up here at 65. That's a nice scalp, real nice scalp, very high probability. Market moves up here, leaves a footprint down here. Shorting that market, 66.75, 65.75, you got another point. Market moves down. You've got a retracement up here. Higher risk, I'll grant you that, because you've got a retracement fairly close to the bottom of the move. Higher risk, but pays off. We move up here. Okay, market moves down, leaves a retracement point up here. We come down, hit a bottom, start to move back up. Higher risk, I know, but 69 all the way up to 70.75. You just set your limit orders where the retracement are. You move up to the high, look for an opportunity to short, and hold the trade until you come down and hit this retracement. Look at that. You're way up here, just about at 72, and you're coming down almost 4 points. You're going to make a killing with this information. My goodness, you barely need a strategy for this. This is a strategy in itself. You hit your retracement. You got another one left up here. You've got another, what, 2 points, 69 up to 70.75 if you just get out there. And then you're way up here. Look for an opportunity to short, and you've got 70.50 as a target for at least 1.5 points, maybe better. And if you hold that for a second position exit down here, you're even in the money that much more. Market gets volatile again, leaves some retracements up here. You take your profits, up you go. Now you know that you're ready to short. You've got some retracements below here. And boom, 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 boom. And down she goes. Look at that. And then in the afternoon here, okay, in the afternoon, look at all of the retracements that you had here. All of these retracements, opportunities for making money. Up you go to that level. This moves up, leaves a retracement to the downside. You've got a couple of points there. Now getting in down here might have been a little bit more of a challenge, but again, we recommend not to take a long trade when you've got retracements just below the market. Up you go. Up you go again. Down you come to these retracement levels. Hits a new low for the day. Pattern's over. Market's ready to move back up. Up she goes. And she'll come back. But in any event, the profit potential by just knowing where these retracement lines are is phenomenal. You can really, really clean up by just having a basis for entering your trade and holding it until a limit order is filled right where the retracement says it is going to take place. Over 94% accurate. Yesterday was 100% accurate, and the day before that was well over 90%. In fact, all throughout last week, well over 90%. So, little wonder we're touting this. This has enormous profit potential. Now, let me explain this a little bit further. I've set up a very simple strategy, and I'm going to discuss the use of these retracements in conjunction with the strategy. Now, it has to be understood that the strategy does not know that these retracements exist. That's not in the equation. So what we're going to talk about is where the strategies appear and where the retracements appear, and what if we try to combine the two. So for example, right out of the gate we have a nice long trade, but we have no retracements. Well, all right, it hits its profit target. That's nice. But a little later on, we get a little retracement up in here. We get a long signal, and it's good for a couple of ticks at best. But then down here, we have these signals. We have no retracements above the market. One gets stopped out, the other doesn't hit our profit target, but really no need to take a loss there either. On the other hand, down here, right in here, where we do have a retracement above the market, the long trade not only hits the profit target, but hits the retracement point. Now, before we even go any further, with a 94% accuracy rate, why trade when you don't have a retracement? If you don't know where the market is liable to go, why execute the trade? Just wait for the retracement to form and then execute your trade. Duh. It obviously makes good sense. Let's look at a few other examples. All right, the market moves up. We have no retracements, no signals until up here. Right in here, we have a nice retracement. Ah, wonderful. Beautiful opportunity to take a long trade. Nice move. 1, 2, 3, 4, 5, 6 ticks right up to the retracement line. Nice profit. Here we have a short signal, retracement lines below the market. Should work. It does. Here we have another example. Long trade, 2 retracements above the market, hits them both. Then later on, toward the close of the day, pardon me, that's not really towards the close. We still got time. But here, you've got a retracement underneath the market. You got some long signals. What have we been emphasizing? Don't take those trades. Higher probability of a loss. Furthermore, you don't have any retracement lines above the market. Doesn't make any sense. Here, you still don't have any retracement lines above the market. You get stopped out. Here, you do get stopped out, but then another reentry, and up you go, hits its target. And then finally here, you've got retracements below the market, but a long signal right on top of it. It goes nowhere. Why? Because the probability is it's coming back. Don't trade that. Here, it's way late. That signal is just way late. I wouldn't bother to take anything like that. We got to be at least 2 ticks right off the low of a pivot. Here, again, a long trade, but you have a retracement below the market. Comes right back down. Finally, you get another long trade, and it works. You hit your profit target. Doesn't quite make it up to the retracement, but at least hits the profit target. And then finally, another long trade hits its profit target, and up you go. That's our video. Come to our website, ask for a demo. This is Rod Kusin and Spoon Man for Risk.